Alright guys, what's going on? This is Ryan with Block Roots. And in my recent post, I put up a Fibonacci retracement. Okay, so this is an indicator. There's a Fibonacci retracement and a Fibonacci extension. Okay, and the Fibonacci retracement tool, all right, is particularly useful in crypto. Okay, for reasons again that fall in line with behavioral finance, behavioral psychology. All right, the self-fulfilling nature of technical analysis. All right, what I don't want to get or what I don't want you to interpret this as is that the same Fibonacci that has a mystical sort of like a mystical property in the universe. Okay, the same mystical property exists in markets. All right, I don't want to get all woo-woo and start talking about how Fibonacci is found in flower petals and bees in beehives and get into talking about the whole math in regards to how the math presents itself in the universe. And it is pretty interesting, okay, but I don't think, I think more often than not it gets misinterpreted when it comes to trading. Okay, it's not magical. So Fibonacci, okay, the Fibonacci sequence, all right, when we're referring to the actual sequence outside of crypto, basically this is a sequence of numbers where the each number is a sum total of the two preceding numbers before it. So that's the Fibonacci sequence. It's 0, 1, 1, 2, 3, 5, 8, and so forth. So each number moving forward is a sum of the numbers, okay, the last two numbers, all right? But the Fibonacci retracement tool in crypto, okay, this is useful for three things, okay, I think. So one, we could begin to see, all right, based on retracement levels, how strong a trend is. Okay, so I've mentioned this before. When price retraces minimally, okay, that means that buyers are stepping in much sooner. All right, so if we look back earlier in the trend, all right, where we see that, for example, we didn't get much of a retracement after these large moves up. Okay, that means that buyers are stepping in much sooner. Okay, there's less profit taking. Okay, and this is indicative of a strong trend, right? So normally, what we don't want to see is price make, deep retracements. Okay, so deep corrections after moves up. Okay, what that means is that buyers and sellers are not interested in buying this thing as rapidly as possible. Okay, and the equilibrium between both of them, since it is deeper, it indicates a weaker trend or a weaker move. All right. Now we do see, points that invalidate this where there are moves up. Okay, and we get a really deep retracement. Okay, and then we end up getting just another test of a support, and then we carry on and we progress in the trend. All right, but in terms of trying to apply this consistently, generally speaking, the less of a retracement, okay, the stronger a trend is. And just think about this as, in terms of it being impulsive and continuing, right? So we have a little bit of profit taking, but before any major profit taking, buyers are already stepping in and trying to buy this much sooner. Okay, so think about this in terms of buying the dip. Okay, so any little dip is bought up, all right? Less of a retracement. So when we take the Fibonacci tool, okay, it's this tool right here. You go in here, Fib retracement. I put mine on TradingView. You can hit the favorites button. So you hit the favorites button, and then what will happen is you'll have this little favorites toolbar, wherever mine is. It's hidden right now. It's right here, okay? And I have my go-to tools, all right? So here's the Fibonacci tool, and what we do is we select a point, okay, in which the move began. We select the maximum point, okay. Now this is where it becomes interesting because price is going to progress for some time, and your maximum points might change. So are we talking about the maximum point for this move, or this move, or this move? Now, generally speaking, okay, what I want is a first major wave with a retracement, okay. Now, if this is a trend in progress and I'm, in a breakout, or I'm not in the breakout in this case, and I'm looking to enter in, I'm going to be using a little bit more than just a fib retracement because, as you can see, all right, this did wick up here. All right, the wick up here came back down to the 382, came down a little bit deeper in between the 5 and the 382. This was bought up immediately. So this is a strong trend. Now, nevertheless, you have to have some price action occur before you can begin to apply this, and that's my point. You can't, you have to have some type of high put in. Now, whether it's the high of the wick, all right, you can see that if we go down to the lower time frame, all right, now if I could find this again, I hate this part about TradingView. I wish there was an actual button, maybe there is, and I'm not familiar with, that takes me back right to the point that I want to be at and loads just that price action. But I'm just going to find this right now because usually it highlights down here. So one sec. All right, never mind. It is not loading and I am not waiting. All right, so nevertheless, let's get back to what the major point was of all this. So we are identifying, okay, the low point, okay, the high point, all right? So just to distinguish these two real quick, whenever we had this initial move, okay, an initial spike up, all right, where we are rejected somewhat, okay, you could look to buy for an extremely impulsive move. The first area of importance is the 382. Okay, so 382, and you can see how this kind of perfectly coincided with this area over here. There's major confluence and price action before ultimately moving up. Now, for larger moves, though, I'm going to wait till majority of the move has been established. And it's really hard to, not talk about that without sounding somewhat hindsightish, but nevertheless, okay, we can see how this pattern progresses, okay, for a majority of this move. So you could see that, still the impulse, the buying, okay, quickly, all right, at any retracement at the 382 level is maintained, okay? Now from whether you're going to go from here, okay, or here, you could still see that the 382 is a rather important area. So I don't generally use the fib retracement alone. What I'll do is look at price in relation to support and resistance, okay, and then I'll see if a major support or major resistance lines up with one of the more important fib levels. Now, typically, if you are if you're in a new move, okay, and you're a little bit late, okay, so say in this period right here, you're late to this move, you're not really sure where you want to buy, you see prices stalled, okay, typically what you'll do is if you're using the fib tool, you pick the low. You'll establish the high area, okay, based on price consolidating, and you'll say that I'm going to be buying based on a dip of, the 382, the 5, or the 618. So in this case, this recent price action of just complete relentless selling blew through all of these. But in other periods, okay, when we had, for example, whether you wanted to use this right here, okay, so say you're out of this move, price is rejected up here, where do I want to buy, okay. Okay, you can see that as price is rejecting, all right, the area to buy is the 382. So you have to use this quickly, all right? So time is of the essence with this, right? So the idea is that when you're using the Fibonacci tool, all right, when price is, let's say, for example, price makes a move up, consolidates, is somewhat rejected, okay, where we see there is a high volume rejection, okay, let's say we have one of those candles where we have a high wick to the upside, okay, but price is pushed back down. Okay, in this case, I'll take my fib tool out and I will choose the point of rejection, okay. So you have to imagine that I drew my drawing incorrectly, so I'll use it from here. So let's act like the top of the wick was up here, okay. Well, you know what I'll do? I'll just redraw this drawing so it's done properly. Okay, up here, rejected. All right. So here, now what I'll do is if this is the rejection point, say that this whole bar has not manifested itself yet, okay, what I'm looking to do after price is stalls up here, okay, I'm going to be looking to buy at a retest of the 382 and the 5. Now, 382, okay, if we see a response there, you might not get the 5, right? The idea is that there are typically, okay, there are resting orders that are placed in anticipation of these areas being important, and again, it all comes back to the self-fulfilling nature of technical analysis. So whether or not this is programmed into an actual trading algorithm, okay, that is buying a really strong trend, and basically, the programming will be, some of the criteria would be rather that in a strong trend, after an impulsive move up, we are buying rapidly at any kind of retest of the 382. And then, it might be such that the criteria to maintain is a certain level, and then we sell based on that, and then retest and buy again at a lower level. Now, these are just good areas that you will generally see, okay, because of this self-fulfilling nature, all right, price responding to. So, move right here. Okay, you can see that the 382 level is important. Rejecting up here, stalling, come back down and test the 382. All right, you can pretty much pick mostly any impulsive move, and you're going to see that because people are anticipating this this actual support, you will see that there will be a pause in price. That doesn't mean that price is going to absolutely move up. What it means is that you will likely see some type of interaction here, and that's where you have to apply the proper discretion, make sure that you have, if you're going to be taking a trade based on that, you're using a tight stop in that case. If you're going to be taking a structural based trade based on something like Fibonacci, okay, you have to use a structural stop in that case, okay? Depending on, what type of strategy you're employing, you might be using this to further pick up on a trend following strategy. In that case, when you're trend following, you're going to be using something more along the lines of a volatility stop or moving average stop. You might not necessarily think it's a good idea just to stop yourself out if we get a little bit of a deeper retracement. But when I was using this in the opposite direction earlier, okay, you saw that, okay, I could pick points from a low, extend this up, and I can also pick points from a move down, okay? So it works the same way. So move down, okay, we pick the low, all right, go on to the mid time frames, and you could see, okay, and what I mentioned before was after a really impulsive move down, when we establish, what looks like a V bottom right here, so high volume down, okay, volume's increasing, I'll point this out. So volume is increasing, okay, and then we see that what looks like a decrease in overall selling volume on the way down. Now, mind you, this is buyers and sellers, but this is a good sign, okay? At some point, we assume that bears are going to flush any remaining buyers out, okay? And we should see some type of rejection, all right, at some level where bears eventually give in, and, we see some type of pushback by the bulls. And I hate to use the term bears and bulls like that. All right, it makes me think that I'm calling a football game. But nevertheless, what we see is we have a little bit of a bounce, okay, and then the first targets on the in a trade that is to the opposite direction, it's going to be sort of the same thing. So we're going to be looking to sell, okay, or in the case of if someone's looking to open up a short, we're going to be looking at those important areas as well. So the 382 and the 5. All right, this is particularly useful when we're talking about, okay, whether or not a trend is failing, okay, or a move is failing, okay, reversing in this case. So if we have, for example, a move that moves down, okay, this much, all right, we had more 4-hour bars than anything else, okay, if we pass through these areas, okay, if we see that we reject, we close above, we pass through, if we close through this area, okay, this midline, okay, this might be a potential trend change, okay. Now, for the same reason, okay, in this case, all right, selling has begun to, relent a little bit in terms of buying and selling pressure. Buyers are starting to actually, in this case, win the battle. All right, so we see that we want to be on sides with the majority, right? So we want to be on sides with the right side of the market. And when we cross above an equilibrium zone after a move like this, let me just take this off again because it's a little cluttered. So move down. Okay, important areas are the 382. All right, the 5. Okay, if we cross above the midline, get rid of that. If we cross above the midline, all right, and we close up, that's where I've said that the trend potentially has shifted. Okay, so downward momentum at this point, we have a higher low, all right, or the beginning of a trend change rather. All right, and in this case, we're back above the equilibrium zone of this major move, all right, to show that, there might be an actual shift. So the equilibrium zone, okay, is important in ranges as well. And I mentioned this, so I kind of want to hit all these points right now. So equilibrium zone, think about the idea of reversion to the mean, all right? So let's go on the higher time frame. Okay, so reversion to the mean, okay, the center zone, all right? This is always going to be important, and it seems like it's, whether or not it's self-fulfilling or one of those just times where, nature manifests itself in markets because markets are a part of nature. All right, the midpoints are generally going to be important areas. So for a major swing high, okay, and the swing low after a structural area has been established, okay, so we're saying that this was a structural area down here, separate range down here, okay, broke out, created a new range up here, we have a swing high, okay, we have a swing low, all right. In this case, we have a swing low over here, and we had the 50 point over here. You can see how that will line up. We have the larger structure being painted, but I'll point out both of them so you can see just why this is important. Okay, and this is why it's important to evolve your charts. Okay, so evolving your charts, okay, as you progress, all right, taking into consideration the new variables. So I'll take one off actually so it's not as noisy to show you the first one. Okay, so let's find that 50 zone. I'm actually going to color it so it's a bit more obvious. And I'll show you again what I did. Okay. Actually, let's redo this because I have those other lines. I have just, for some reason, I just can't stand when I have multiple lines on the chart. Okay. Okay, so for the major structural area, okay, the midline, okay, the equilibrium zone, okay, is, let me get down to 4 because, again, all right, you could see that in the center line, this was an area, okay, of heavy interaction, okay? We'll call this extreme, similar to an outlier, and where's your average? Right in the center. All right, so the equilibrium zone is going to be an important area, okay, for the same reason that, breaking a pattern of higher lows, all right, or lower highs is going to be important. So it's an establishment of who's in control. So above the equilibrium zone, okay, similar to when we were talking about being above the 20 or below the 20. So when we are above the equilibrium zone, all right, that is bullish. When we are below, okay, this is sellers in control. Now it's important that you don't want to get too many variables, start considering too many variables. Okay, but nevertheless, when we're in a range, okay, in this range, I would not say that I'm going to be thinking so specifically about this equilibrium zone, even though it has been important, right? So I'm typically going to be looking for a tighter range. This is more of a blow-off top, all right? And in that sense, after a blow-off top like that, okay, my approach is going to be a little bit different than as if this was just a sideways range like it is down here, all right, like this smaller portion of market structure. All right, so, but again, look, the high, the low, where is price interacting with? All right, a lot of the times it tends to be these three areas. So the 618, okay, the equilibrium zone, and I say equilibrium meaning the 50% between these 2 points, okay, and the 382. So you could see right here that here, up here, 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 above here, okay, so a little false break, like we're going to approach the highs at this point. Not so much though. Okay, down here, here again, all right. So these are important areas, right? These are important areas for you to map out, okay? These are important areas for you to consider, okay, that you're not just going to blindly take a trade on this, all right? So there's definitely going to be times where, depending on, certain conditions and certain contexts, you're going to be more prone to taking a trade than not. But again, what we're doing is we're just taking the fib tool, okay? We are picking the point at which the trim began. I don't know why that sounded like I was a southern person, but we're picking the point at which the move began. Okay, so we're down here, or over here in this case. And why do I say this began right here? Well, what do we have to establish first? We have to establish that there was a range. Okay, so this was the range. Okay, I'm just trying to encapsulate this, vaguely. I don't have to point out that this was down here as well and that this was a little bit up higher. You understand, right? So maybe just in the case I'll do that just to establish it more clearly. Okay, so we have the wick down here, candle body here. All right, you can see this was the last bounce before flushing through. All right, at this point all stops are hit. And what we're doing is establishing that this was the range. So this is the beginning of the move outside of that range. We take our fib tool right here, down to the bottom of this. Okay, extend it over. Okay. And you can see that this is an important area, right? So in terms of what we want to see moving forward, I said that we want to see us close above the 5 level. Okay, let me put this on a higher time frame. Whoops. Okay. Low. Get down to the low. Okay, there we go. So right here, bottom of this range, using it on a higher time frame. Now, I want to see us close above the 5 level. All right, this is not necessarily looking like a solid close to me. Okay. Now, when you say you want to see something before something else and you want confirmation, right? So what does that mean? This is where a little bit of discretion is going to have, okay, is rather should be weighted. So we are technically closing above this with this candle right here. Okay. Now, I don't know if everyone is familiar with the actual shapes of candles, okay, or what candles mean, okay, but you have to understand that, for example, the candle says a lot about the battle that took place within the candle. So when we have a candle that is setting up, all right, to where we have, in this case, it's moved up slightly, but where we have something like this, okay, This is a doji. Okay, so price moved up, price moved down, but did not move, or open or close were not much different at all. Okay, so this is a large indecision, right? So whether it's large, rather, I don't want to start putting more weight onto it. This is just an indecisive candle, okay? There's a big battle at this point, okay, between buyers and sellers, and we have opened and closed pretty much at the exact same area. So what I want to see is anytime I'm looking for confirmation above an area, especially for some type of breakout, okay, what I want to see is one of these large candles break through. So I want to see a large candle break through, okay, and what that might mean is that I'm looking at something that's going to be more along the lines of 10,550 and 10,600. So yes, what happens is when you have a move like this and you say that your criteria is such and such, okay, I'm implying that I'm going to miss out on a certain amount of the trade, but still the risk reward is there for what I consider my target. So you have to keep that in mind. Yes, when you're trend following, for example, you're missing out on a portion of the trade. Okay, you're implying that you're only trading based on a crossover, for example. Okay, so you're implying that price has to move to some degree to the upside or to the downside, whether you're opening a long or short. Okay, and yes, you are not going to be in the trade for the entire time. The idea is, though, that there's a little bit more solidarity behind the move, and Bitcoin is an asset that moves on momentum. Okay, when it trends hard. So for you to miss the first little bit of it, not necessarily a big deal. And after a move like this, I especially want to see that we cover this equilibrium or middle ground zone. Okay, so I want to see that we cover this 50 zone. All right, to indicate to me that that this is likely just another test of support. All right, on the higher time frame. And as always, okay, I've mentioned before, and I joke around about XRP, and sure, by academic standards, the major support on XRP has not been broken, but I'm more along the lines of going to be more, I'm going to be more inclined to believe that it does break with that asset. But with Bitcoin, I am not going to take a trade until we actually show that we have broken a support or a resistance. Okay, I don't want to just assume that it's going to happen, because then what happens is you get really bullish at resistance, price rejects, you get really bearish at support, and price bounces. So always treat support and resistance as support and resistance until they prove you otherwise. Okay, and you can see that over here, all right, there were multiple times when it looked like price was going to, quote unquote, shit the bed, right, fall down. So this looked weak over here, right? Everyone was bearish over here. Okay, not everyone, but a large amount of traders were bearish over here. This was an area that looked like weak price action, or rather not this area, but this area over here. Okay, so moving down over here, all right, looked like very weak price action. Okay, but we hadn't broken our major support, right? So don't start trying to anticipate what is going to happen with Bitcoin until you have a little bit more evidence to support your actual directional bias, right? So that's that, guys. Hopefully that was helpful. This is Ryan with BlockRoots. As always, exercise proper risk management and trade effectively. And if you have any questions about Fibonacci, feel free to direct message me. All right, guys, signing out.